Good morning, students. We are dealing with the second chapter of accountancy. Here we go with the theory base of accounting. In the previous session, we came to know what exactly the how the theory is based for accounting, why we require accounting, as we have discussed. Then further, we came to know about the gap, generally accepted accounting principles, why they are being required. See, when you are running of the business, exact the thing is what it all the things should be maintained correctly. For that purpose, we are having a regulatory body, ICAI, so that they have given you all the principles how you can run out the business and how in what manner all the transactions should be made. These all things are nothing but the principles which are being formed by this regulatory body. Then further, even these principles are called with different names, as we saw in the previous concept. Like it is a concept also, as well as the ideas, then convention, then few of the things we have seen with that in our previous class. So with further to this concept, we are having a basic accounting concepts. Now, which of the basic accounting concepts and what exactly it does? See, in the last session we have discussed the introduction part. Just now we are with that gap. Now we are proceeding with the basic accounting concerns. Now, most probably I will be taking into consideration first 3 points. Then remaining 3 to 4 in a next sessions we will be discussing, so that it should not be heavy, as heavy much heavy to understand you all. Why? Because one after the other we will be having further. So, as per the things, basic accounting concept as referred as a fundamental ideas, basic assumptions. See, basically what we assume how our business would be. See, when you are starting out any of the business, your main motto will be to look or imagine that. Imaginations will be there. Huh? If I would have started a business for 5 lakhs, I may do this, that. That is what assumptions we call. Imagination is nothing but the assumptions what you are doing. Underlying the theory and practice of financial accounting are board writing rules of all accounting activities and developed by the accounting professions. Now, how you are going to start a business, everything has to be recorded. See, as per the statutory body, what they say, regulatory body, you have to run all the activities, all the transactions as per they have provided to the accounting professions. Now, how the accounting professions maintain their accounts, we are going to see. Now, as for the things, the first we have taken here the business entity concept. Now, what this business entity concept means? See, in the previous sessions, we have discussed about the entity is nothing but the person who is running out the business. It is what artificial person. Now, in this, you are a person that you have invested here. Now, one thing you need to know is in the business, we are going to record only the business transactions. What we are going to record? Only the business transaction. Whatever you are the investor, you have invested 5 lakh rupees in your business. Example it is. So, you will be only the amount whatever we invested, you will be the liability for that business. Then remaining all the things will be proceeding with the things. Now, when you are starting in the business, you will be purchasing the assets. In that assets, it may be any of the things like goods, furniture, machinery. These all things are being purchased in your invested amount. Now, the invested amount is nothing but the liability for the business. What it is? It is liability for the business. That is what the point to be noted here. Then this concept of business entity assumes that and uh, business are distinct means separate from the owner. Entity is separate, business is separate. See, when we are talking about the business, I have invested 5 lakhs. I am different person, and what the business it is there, the entity, business entity is a different. It would not be a same. See, when we can say that according to this concept, business is having its own separate identity from its owner. Means what? Business is having separate entity than the owner. Owner is separate, business is separate. Now here, whatever you will be having, the transactions or any of the expenses will not be taken into consideration in the business transactions. If you are taking, it will be called as this investment. This investment of your liability, you are taking out your liability, we can call here. So even we can take in a example format, but how you can come to know? See, business enterprise and owner are two separate entities. Business entity is separate and the owner is separate. They are independent entities, or they are independent. This is the owner is separate, this is a business is separate. In that, what happens? Whatever the transactions goes in the business only will be recorded, not about the person who has invested. If he is purchasing or taking any of the amount from the business, it will be reduced from his liability. Like 5 lakh I have invested means, in that 5 lakh, if I take 50,000, means my liability to the business will be how much? 4 lakh 50,000. I will show you here. If I am a person, I have invested rupees 5 lakh. If I am doing any of the expenses, if I am doing any of the expenses, out of this I am taking rupees, withdrawing 50,000, withdrawal, withdrawn 50,000. Now this is what will not recorded. Directly this 50,000 will be deducted from the liability. This is what liability to the business. This 5 lakh is a liability to business. It is liability to the business. Now straight away, mine liability after withdrawal of this 50,000 will be 4 lakh 50,000 rupees. 4 lakh 50,000 will be my liability. So what we are trying to say here is, our investment in the business entity is separate, and the owner, the investment person I am, mine entity will be separate. We are having two separate entities, business one and one is the investors. Then owner's investment may be owner's investment money in business is a liability for business. As I told you, whatever I have invested, this person what is investing here, this person what he has invested here, that is what investment what we call. This is nothing but liability. Whatever the person is investing is nothing but the liability. Then nextly, owner takes away the business, away from the business, it will be drawings. Now if owner is making any of the expenses like this, he is withdrawing this amount 50,000, means he is taking out his liability. What he is doing? Taking out, means his liability will be reduced to this amount. His liability has been reduced to this amount. Now only his investment in the business will be 4 lakh 50,000. This is what is the general idea. And even we can have the example here, one more about this for the clear understanding. See, Mr. X has started a business. I'll take example here. Mr. X has started a business and invested the amount of rupees 2 lakh. Okay, this amount has been invested by Mr. X. Then further, the transactions, how the transactions are going on. See, transactions will be gone, transactions take place, the amount. Now in this investment amount 2 lakh, what all things we can do here we will see. First, purchase of goods we are doing. Let us consider this purchase of goods of rupees 80,000. Okay, then further furniture 40,000, then machinery 60,000. Okay, then cash balance remaining amount will be 20,000. Okay, this is all about the total investment done by this Mr. X. Now, in this, whatever this we have taken, made the investment in the assets. These are the assets of the business, and this is what the investment. Investment is nothing but the liability. This is what liability for the business. That's it. This can be seen and understood in this way also, or else previously we had one of the example. In that also you can easily get understand what exactly this is. Now this is rupees 2 lakh investment, what it has done. This investment is nothing but the liability for the business. What it is? The liability for the business. So this is all about the first point, business entity concept. Now coming across the second point, what exactly our second point means. See, money measurement concept. It is money measurement concept. In this, what we are going to do, see, all the transactions which are being made in the business should have the value. What value? This is what, nothing but the value in terms of money. Now goods you have purchased goods for rupees 80,000. This is what, nothing but transaction which is measured. What it is? It is measured in terms of money. So what exactly we are dealing with the second point now? It is nothing but money measurement concept. Nothing but money measurement concept it is. So here we shall take all the transactions which contains the value, measurable value, which we can measure this value. Okay, that transaction we are going to take into consideration. So I will highlight this concept. See, according to this concept, we can record only those transactions which can be measured in terms of money. Now, which transactions we can record here? Which contains the money value, like this. Money measurement means what? Which is containing the money value. Now, purchase of goods of rupees 80,000. It is having a value. But few of the transactions, if we are having like purchase of computer, if the value is not there, money value they have not said, purchase of material or purchase of computer, these are the transactions made, but the money value is not given, means these transactions cannot be recorded. See, even in the previous sessions we have discussed many of the examples, like inspiration of the employees we can do, or else one more thing, appointment of the manager. Can you all record this transaction in this books of account? If you have appointed any of the manager for your business, that appointment will not be measured in the money terms. They cannot be recorded in the books of account. That are recorded in the documents just of the appointment of the manager, but not in the books of account. That is what you need to know. Now, whatever the transaction you are doing here, whichever is containing the money value, is that only transactions will be taken into consideration. So the basic accounting concept is the second point, money measurement concept. Every transactions whichever we are doing, that should have a money value. Then those business transactions which cannot be expressed in terms of money are not recorded in the books of account. As I told you all, whichever transactions are not having the money value, that will not be recorded. That is what the clear picture of what the measurement of the money value. Okay, so this is very simple to understand. We are not having any complications regarding this. very easily we are going to understand. So in a sentence, so I will be raising this and making here the sentence, how the transactions would be recorded and how not. See, purchase of raw material. See, only this much has been told to you. Purchase of raw material. We have done the purchase. But of what value? For how much rupees we have purchased? Can you record this in the books of account? We have purchased the raw material. Of how much? It cannot be recorded. So it should have a money value. Purchase of raw material of rupees 80,000. The amount, whichever it is, 80,000. Now this is what the transactions which are having the money value, that only we are going to measure here. To keep in this mind, the money value, if it is been given, that transactions can be recorded, or else other, no, you can't record it. Then appointment of manager. Can you record this transaction in the books of account? It is not possible itself. This is what the concept which is different than the money concept. This is just a worker has been employed, but same salary given or paid to manager. This can be recorded, or for how much salary paid to manager? Rupees 15,000. This cannot be recorded, but this point will be recorded. Why? We are paying the money. Money is nothing but the salary for the manager. We are paying this 15,000. This transaction will be recorded. So as we are saying that appointment of the manager, no, we can't appoint the manager. So this is all about the thing. Salary given or paid to the manager, it contains the measuring value in the money terms, so that can be recorded. Appointment of this, just a document purpose. Documentation can be done in the business, none other than the recording the accounting transaction. So this is all about the second concept. So first one clear, second one is clear. Let's see what this going concern means. The next point is going concern. Now going concern means what exactly we say. Now going means it is moving forward. That is what you need to know. Then further, according to this concept, what exactly this concept means, see now here. According to this concept, a business is going concern means it is running. Running means operating here, which means one should operate their business for a long period of time. See, when you have started a business, it will not be having a 1 month, 1 year time period. What it is? It is not having 1 month. It is not for 1 month or 1 year, 1 year time period. See, it is having a long period of time. So it is not this one also, not for 1 year also. It is a long period of time. It is long period of time it is. So your business, when you are starting, it is a going concern concept. Means your business is going to go for a long period of time. It is not only for a one period, for specific time like 1 month, 6 months, 1 year or 2 years. It is going to be a continuous. It is very simple to understand here. It is a continuous concept. See, the concept of going concern assumes that business would continue carry out its operations infinitely, that is for a fair long period of time, and would not be liquidated for the foreseen future. Means it is a long term concept. Now this business, whatever you have started, will be running out its operation for a long period of time. Now see, even in this, what happens at that time, if we see, if you are buying one of the uh, material or a good for your use, or else asset, if you are going for a purchase of computer, if you are purchasing a computer for rupees 50,000. See, if you are doing this, purchasing a computer, this computer, the sum amount should be gathered in 1 year expenses only we have to take, or for a long period of time you will be using the computer. Let's consider life expectancy of this computer is 5 years. This you are measuring, means using for 5 years. Then the question arises, the expenses should be entered in 1 year only, or every year you have to deduct continuously? Every year you have to deduct for this matters here. So as this is what continuously you are going to use further, this you are going to get a profits for further work. See, whatever transactions you are recording in a computer, it will be helpful for you, and whatever the work is done will be faster, right? So this concept says that what it should be deducted in the expenses of 1 year only or continuous. Now it is what the going concern, how you are going to take into consideration here. See, I will just highlight the example here. See, a personal computer of some rupees 50,000, what we are buying really is the service to the computer that we shall be getting over estimated lifespan of 5 years. That is what 5 years will be using, for example it is. Then it would not be fair to charge the whole amount of 50,000 from the revenue of the 1 year only of the purchase. Now whatever the revenue you are going to get, in that only, you for 1 year only, you should not say that this should not be deducted, this expenses should not be deducted from 1 year revenue only. It should be at least further also. Now it depends here. In the 1 year only, if you are doing whatever the revenue you have got from first year, in the same year only, if you are reducing this 50,000, then remaining will be the profit for you. Now this is what the how the process of on going concern comes here. Okay, so till here we'll be holding out the session. So these 3 points are enough, what I think so. Okay,